stocks overall have gone upward trend. So once again, from a buyer perspective, that sentiment is very high. Honestly, on all levels, because if you're at the high end, you're seeing that $10 million home that would have been $15 million, and you're saying, okay, I have to grab that.
If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby.
So yeah, I mean, I was taking a look, like I said, that you're out in San Francisco, and I follow a number of podcasts and like startup guys, the Jay Calacanis of the world, some of those guys on the All In podcast. So I hear them talking about San Francisco, like David Sachs, I think, and then they're like, it's just been wild here as far as real estate goes, pricing and all that thing. So I just want you to jump in, kind of tell me how the market's going, and if that is an echo chamber, just like a silo, just because that's the only thing I've really heard about it. I've never even been out there. So just kind of curious how the market is right now out there in your area.
Sure, definitely. Like you said, Randall, very correctly, the market in San Francisco has been a roller coaster. And I want to say it's been a roller coaster since COVID, because we were coming off such of a high prior to COVID. Of course, rewinding all the way back to 2008 and then bringing forward to 2020. So it took, a bit to get everything in order in general for this region after 2008. But essentially, when 2012 rolled around, the market really started to skyrocket, I would say. And it has to do with a couple of things. Very, very strong tech sector, of course, here in San Francisco and the Bay Area in general. I focus, me and my team, on San Francisco luxury high-rises and all of San Francisco. And then we do jump south, we go to the peninsula, and then we go to Silicon Valley. So the great thing is we have the pulse on 3 different marketplaces. A lot of them rely on one another, of course. Geographically, it's all a straight line from San Francisco south. So that's pretty easy. We don't have to cross any bridges, luckily, because it is the Bay Area. But if you once again turn back the clocks, what was happening in the tech sector in 2012, social media, right? And where was social media? A lot of it was headed and located was, of course, in Silicon Valley. And then, of course, you have Twitter in San Francisco. So between the polarity of having Twitter in San Francisco and, of course, Facebook, Google in Silicon Valley, San Francisco just became such a gem, a hot commodity. The mayor at that point in time was very development pro. So there was so many great projects that came into play. I mean, the Twitter building is honestly one of them, because it was a dilapidated, you could say, almost warehouse for furniture. It was a furniture mart. And lo and behold, Twitter comes in and makes it into this shining piece on Market Street, which is the main street in San Francisco, making it the hub of social media, you could say, in theory. And they just brought so much synergy with them because the company was growing extremely rapidly. There was housing demand that was needed because, of course, when you have a large company like, well, small at that time, but, fast-growing companies like Twitter. And then, of course, once you have a big company, you have all the other small startups that decide, do we want to be in San Francisco or do we want to be in Silicon Valley? Everyone said San Francisco. So lo and behold, you have a big demand base of, high income earners in general, very educated clientele, and either they're leasing at a high rate or once again, they start to buy and infiltrate the buying market. Then you run into the quandrum, is there enough housing? At that point in time, there was not enough housing. The city got really rapid in terms of expanding housing, and a lot of developers jumped the gun and started to develop luxury high-rises, some nice home communities. So it was a time of expansion from 2012 till 2020, 8 years, right? That's a good amount of time, less than a decade. But if you imagine every single year was almost a decade, that's how fast this marketplace runs. And the energy marketplace is just that fast because it's all technology. We do have a little biotech, of course, that infiltrates our area, but for all intents and purposes, tech is what dominates our world, like it does now where you are in Texas.
Yeah, I mean, Austin's booming right now.
Right?
Yeah, Austin's definitely becoming that tech hub of Texas.
Yeah, no, it really is. I mean, we have a lot of transplants who are going to Texas and, particular Austin, of course. And then we had your guy in the Twitter guy.
Yeah, that guy.
Elon's in Austin, right? So you can see how the tables have turned in a way. We want to say the tables have turned.
Yeah.
So, once again, what truly has happened, you had 8 years of massive appreciation, large rent increases. The city changed the landscape overnight. We had the tallest tower that was built, Salesforce Tower in San Francisco, that trumped the Transamerica building. So that became the new epicenter, you could say, of San Francisco downtown living. Many, many tech companies came into San Francisco. Everyone from Apple to Google all had satellite offices in San Francisco. Everyone had tech buses, going from San Francisco down to Silicon Valley. So if you could kind of reimagine what that time period looked like, it was high demand in San Francisco for housing, high demand in San Francisco for office space, high demand for everything, for all your services, from restaurants to entertaining. Everything was in such high demand. Then you have 2020, COVID hits, offices close, people not necessarily add that into living in smaller spaces. The tech companies start coming out and say, okay, you can work at home, you can work anywhere in the world. So then, lo and behold, once again, bright individuals, entrepreneurs, innovators, so they go all throughout the world and say, if we can live anywhere, let's live out our fantasy. Let's do what we really want to do in our life. And San Francisco was mainly a place to thrive and be very entrepreneurial. Of course, walk to work, bike to work. But when your office is no longer necessarily saying you have to be in that San Francisco office, once again, the world opens. So, a lot of people state that there was exodus out of San Francisco. And in theory, I don't think so there was, but at the heart was.
Yeah.
So the heart of the city exited, not necessarily population-wise or otherwise, because people imagine very high income earners, they could still keep their residence in San Francisco. They can even carry leases in San Francisco. A lot of renegotiation was going on for leasing. So, okay, I'm going to be out in Europe for 6 months. I want to still have my nice Noe Valley condo. I don't want to lose that. Maybe it's on rent control. Maybe the tenant wants the tenant to stay there. Maybe the tenant's savvy and they renegotiate the lease. On the sales end, you didn't see a lot of people all of a sudden massively flooding the market and all of these homes coming on the market for sale. But of course, homes did come on the sale and on the market for sale. And, some of them did sell and some of them didn't sell. The most compromised area, of course, was downtown. And it still is. Maybe it's around down 30-40% pre-pandemic levels still to this day. So great deal. So come to San Francisco, buy a luxury high-rise, and you'll do good. And you'll have good appreciation, because I officially think San Francisco has bottomed out. We had a very large conference, the APEC conference, that showcased San Francisco, and the city did a wonderful job. No large incidents, high level of security. So it showcased that this is not a doom loop city. People have come back, companies are coming back. And now we have the next big thing, AI. So social media, snoozer, but AI, wow, look at that industry. And lo and behold, the infrastructure and everyone who is in the know of AI are in San Francisco. They've entered a new corridor of San Francisco called Hayes Valley, and that's where they want to be.
Why that area?
It's out of downtown, for lack of a better kind of sentiment. It's much more smaller scale. It's a much more intimate, more quaint. It's more hip, that's for sure.
Yeah.
So it's at a crossroads of a lot of great neighborhoods that always do well when the tech is doing well. The Mission Corridor, Hayes Valley is a newer neighborhood. And then you have Lower Pacific Heights in that area. So once again, it's positioned where a lot of people, in all honesty, wanted to live, even during the social media frenzy. But they were forced more into downtown because that's where a lot of the large high rises were for housing. And it's also where a lot of the companies were located. So once again, people do still want to, if they need to go into office, they want to at least have the option of walking and riding their bike at a comfortable distance to the office.
Yeah.
So that's... by all means, San Francisco is 7x7, so you can be anywhere in San Francisco and have a comfortable commute in all reality. But, once again, I foresee then, since the positioning of the city has kind of moved a little out of downtown. That area will recover, of course, much more quickly than downtown. Downtown now has more of a challenge in terms of some social issues. Of course, everyone knows homelessness in San Francisco and what that means, crime in San Francisco and what that means. But in all honesty, my father was in San Francisco in the 70s, and it was the same thing. So it's not something new that San Francisco. My wife and I, we lived in luxury high rises for 15 years in San Francisco, and it's always in the back of your mind. So the media has come down hard on San Francisco, and they've created a story of these large tent cities and XYZ, but that's not the reality. That's a small section of the city, and great media news and great things to get on social media and get frenzied about. CNN, 60 Minutes, great. But, in all reality, that's not really what's the problem in downtown. The problem is we need more commercial reconstruction and reconfiguration because you have great luxury buildings that are vacant. I have a tenant in one of my properties that I own in San Francisco, and she said the building used to have about 200 people walking in and out of that building, and now it's only 10. So that's a problem. So once again, what it alludes to is opportunity for real estate really to be reconfigured. Is it housing? Is it more entertainment in the sector? Is it more services? Is it more education? Is it grand hospitals? Is it research institutions? So the opportunity is there. So it's a restructuring that needs to happen because once we have a little more life that's in that area, it'll once again start to make everyone know that that's the place to be. And, once again, the city then automatically becomes cleaned up because everyone's eyes is on there. You have the buildings that are being maintained and you have all the infrastructure that happens. And then someone can't place a tent right in front of the building, right? Because people are going in and out.
So you have a unit and it's down to what, 10% occupancy? If it's 5% occupancy, if there's 10 people in a 200 unit. I want to touch on that just briefly, but you were just talking.
That's a commercial.
Okay.
Well, a tenant of mine who works in that building, they're stating that it's almost like the mini ghost towns in some of these high rises. And some of them literally spent millions of dollars to redo their lobbies.
Yeah.
And now they're sitting vacant. Some AI leases, big leases are being signed as we speak, which is great.
Yeah.
So some of that inventory will be sucked up, but there is quite a few to go around because if you imagine during the whole social media time, when tech was in a different state, a lot of venture capitalist money, people were occupying these buildings and the need was there for a lot of companies to be there. I mean, Facebook has a new building that was just being occupied as the pandemic was coming on. And once again, not all those individuals are coming into the office. So it's probably 40% occupied in a hybrid scenario. But once again, the real story is, of course, the AI piece for San Francisco. What's that really going to bring and do for the city? Because speaking in all reality, the rest of the city has pretty much post the pandemic. But once you're hitting downtown, that's when I'm talking home value wise, obviously commercial real estate wise, you're down 40%, you're down 30%, down 50%. So some large numbers that need kind of some big commercial component and big economic event to occur in order to regain steam where you were prior to the pandemic.
Do you attend or do you follow local politics and government? And is there any initiative to kind of tackle that issue? Obviously, somebody's talking about it. It's a thing. We hear about it in Texas. It's like office space. People aren't working. They're not going in. San Francisco, all the things you just listed out. So what's the not silver bullet, but I guess like what is the discussed plan amongst locals there? Like, oh, this is going to help tremendously if we do X, Y, and Z.
Well, the word on the street, quite honestly, is everyone's sick and tired of the media and downplay, doom loop, and all of any single story about San Francisco. None of it's been good.
Yeah.
We were probably the best city in the world in the pandemic because nothing really happened, quite honestly. And no one ever really talked about that. So I think that's kind of where the problem occurred because all major cities in the world that are on the world stage, which San Francisco is and definitely wants to be, has good PR. But San Francisco, for whatever reason, never really had a good PR agency to manage it during the pandemic and post the pandemic. San Francisco is a very casual environment. If you imagine Northern California versus Southern California, it's a complete different scenario. We don't like to boast and brag. I'm a native. It's a very understated world. You don't state you have $20 billion in your account. You don't show that ever in the way you dress and the way you talk. But in the world stage, that's what you need. If you imagine Paris, Hong Kong, London, I mean, these are flashy places, Miami. So the world hasn't really moved into the phase of being more casual and being understated. It's still where money talks, where that show of luxury talks. So obviously, that's not really San Francisco, and that's honestly not really Northern California. But if you want to play in the world stage, that's kind of how you have to read or be. So there is a lot of grassroots efforts that only honestly started this year, where I see people kind of joining forces and saying, we're sick and tired of San Francisco being at the bottom of the barrel. We're a world stage city. We have such a great economy. We're innovative. We have beautiful vistas. We have beautiful views. We have so much to offer, but no one ever talks about that. And no one ever acknowledges that. A lot of blame is honestly put on the mayor. There is an election coming up, so that could bring a change. I mean, I'm not one to say if someone did a good job or bad job, but the writing is on the wall of maybe there could be some change in City Hall. Yeah. But I honestly don't think that's where the problem is. It's just in regards to not showcasing yourself enough, not selling yourself enough. I mean, we've entered into a world where you have to constantly sell yourself. Yeah. And if you sell yourself, you get to the bottom of the barrel. And if you aren't, counteract CNN news, bad social media posts, you're at the bottom of the barrel. And no one has really done that. So you just dig your own grave, because the world is not really looking at maybe some of the facts of what they know. They're just looking for that instant sensationalism. And you can't counteract that. It just becomes harder to make everyone feel that you're okay. I mean, I've had friends, colleagues, I don't live in San Francisco anymore, but they get a lot of phone calls. Are you okay? Is everything fine? And they say, oh, yes, yeah, we're fine. Yeah. So, once again, people got so many of those calls that they got sick and tired and said, we have to do something about it. It's definitely more grassroots, as very Northern California and San Francisco would be. It's not some big cohort of people who are demonstrating or an upheaval or doing anything big. A lot of grassroots efforts are being done. And, let's see if that really does things to bring up the sentiment of San Francisco. Like I say, I think honestly, we have bottomed out. So value-wise, I don't think so. We're going to see a lot of big kind of deals in terms of low deals of a commercial property being sold for pennies on a dollar, something of that nature, or even luxury condos. Because once you start going out of luxury high rises, I mean, that market is pretty much recovered. Yeah. And they trade very well in a way. Yeah, let's talk about real estate then specifically. Let's dive into some of that, just because, I mean, we could talk San Francisco politics and like what's happening, but at the end of the day, let's figure out. So do you focus on commercial and sounded like you had a commercial tenant. So do you do commercial and residential, or where's your focus and what do you do mainly residential? I do commercial too, but a large portion of our team, I mean, of course, we've transitioned, right? Because there's been so many people who were in commercial, now they're in residential. So it's kind of the sign of times. So yes, predominantly at this point in time, more residential. But, we have to keep a hawk eye on commercial too. Okay. But you've invested in commercial. It sounded like you have a commercial tenant. Is that correct? Yes, correct. Okay. So then we'll talk about that in just a second. Let's first talk about the residential side. So the price point that you typically focus on, like where are you and where is that in relation to median home prices in the areas that you serve? Well, we start at the medium and then go up. Yeah, okay. So essentially, when you're talking price range, 1.5 to upwards of 10 million. Yep. So obviously a big range, but there's going to be that range when you're dealing with even luxury condos and single family homes, because again, you have a different appetite of people who are just starting out and those who are moving on to their second, third, fourth home. Yep. So 1.5 gets me what? Is that a median home? Is that a 3-2 or is that a high rise condo? What am I getting there? I have a 2-bedroom. Okay. 2-bedroom home, 2-bedroom, 1 bath, 2-bedroom, 2 bath. That could be a condo. It would be a little tough for a single family. When you're looking at single family, that would definitely be the entry point for single family. Okay. And so then you go up from there. So I can speak to Texas and kind of what's happening in Texas, but curious about, again, your area, because
Have you guys seen a slowdown in the transaction volume because sellers didn't want to sell? Are they rate sensitive buyers in your area, or is there a lot of cash transactions? And so the price points haven't really come down. I know you said that they're back to pre-pandemic levels. So what did they drop to? Like, what was the low, I guess, on a price point? Did you guys have 20% decrease in pricing in all the areas outside of downtown?
Yeah, I mean, easily the 20% range across San Francisco. And then you have your pockets who, on average, say maybe they were down 10%. And then the hardest hit are the luxury high rises in downtown San Francisco. That's 40%.
Yeah.
I have a pretty range.
So was a contributing factor the fact that sellers didn't want to sell again because rates were going up, or like what was happening that was driving? Like obviously the pandemic and the work from home was driving the decrease in demand, but simultaneously in the last 6 months or 12 months with the rates increasing and sellers not wanting to sell because they can't get the price point. I mean, is that happening in your market, or again, is it more of a cash driven market when you're dealing with some of the luxury properties that you're dealing with? And so rates aren't a factor.
No, rates are definitely a factor because everyone did get used to, even if you were a high income earner, or even if you had a lot of cash, the interest rates were so fabulous that people took out a smaller loan if they didn't want to do a 20% down, like you said, free money, right? So, we have so many financial savvy individuals here. They could definitely pay all cash for the home, but why not hedge a little bit and take the benefit of those lower interest rates? So that obviously did bring the sales and the dollar volume of transactions up from 2021, even 22. And then, when we were in 22, the transaction volume just went down. And we do have a lot of individuals who are first-time home buyers too. And even if they're a first-time home buyer, they may be purchasing a home for $2 million, but this is the first time they're purchasing a home. And the effect, honestly, was more of the stock market, because when you have a lot of people who are in the tech industry who are buying homes, a lot of the valuations of the portfolios did fall. So in theory, they had less buying power of what they really probably wanted to buy. And also, like you said, the interest rates were high. So it wasn't a good scenario. And then, quite honestly and transparently, there was a good amount of layoffs, and you were never kind of sure were you going to be the next layoff, right?
Yeah.
So that was all part of the 2023 marketplace. Layoffs in the tech sector were going on rampantly at the start of the year. The interest rates were starting to increase, and the stock market wasn't doing that well. So you saw your portfolio fall.
Yeah.
So it did give a lot of confidence to the buyers to kind of jump in and buy something.
Yeah.
If there's a screaming deal out there, yes, there was that group of people, but general enthusiasm was low. On the seller side, same thing. Their stock portfolios weren't doing as well. So maybe they're at a $2 million home, they want a $5 million home. So they have less cash to put down. Then they go for a loan. The interest rates are higher. So, their buying power, I can't buy 5 million, I have to buy 4 million. And then slowly, the inventory started to decrease. So there wasn't really as many options there. So it doesn't kind of bring an enthusiastic audience from a seller side or a buyer side.
Mm.
The main people who were playing were the people who did really they just wanted to get out.
What are you seeing now then? I mean, where are you guys right now? Like, what's transacting the most? What's keeping you busy?
So right now, still the entry points are coming back because everyone's saying, okay, interest rates are falling, interest rates are dropping. That's the word on the street. Interest rates have held and interest rates are dropping. So the entry level buyer is back in full force. That's for sure. They took a snooze last year, but they want to buy.
Okay.
Leasing rates did fluctuate a little bit, but not enough to say that they're enthused to lease another year. Still, you're leasing at a premium in general. So they do want to buy. So that market and that marketplace is very, very active right now. Everyone's strategizing. We're just kind of waiting till more inventory to pop up. Everyone's kind of course correcting now because you never knew that all of a sudden kind of that rate story was going to change relatively quickly and the sentiment would be much higher. The layoffs have trended down. So that confidence level has come back. No one's worrying in 2024 and saying, I may be the next person. They're really not worried anymore in that. And, stocks overall have gone upward trend. So once again, it brings from a buyer perspective, that sentiment is very high, honestly, on all levels, because if you're at the high end, you're seeing that $10 million home that would have been $15 million. And you're saying, okay, I have to grab that. So they're swooping in and they're swooping up those homes. The entry side, now's the time, because the fear on the entry side, quite honestly, is interest rates are steady and they're going to drop, I'm now going to get into competitive situations and I'm not going to get my home. So everyone's trying to rush to the table to not enter a situation where the buying side, they're in bidding wars again. They were years back.
Yeah, get in, get the deal. So are you like 50-50 list to buyer rep, or are you all list? Where do you live in that?
About 60% listing and 40% buyers.
Okay. And so what are you doing now? I guess if a buyer comes to you and you're like, there's no inventory, we can't, I'll send it to you whenever it comes out. But like, what is the, I guess, the turnaround time? What on the list side, like what's your days on market once you guys hit the market? And then on the buy side, how long is it taking you guys to find a house or find a unit?
On the list side, prediction wise, because, here we're sitting in January and the market really does start opening after the Super Bowl. But in theory, if you bring a listing on right now, since the inventory is low, if you're a hot listing, sharply priced, sharply presented, right price, you're not expecting 2021 pricing, then you are going to be selling in 2 weeks.
2 weeks. Okay.
Yeah. On the buy side, get your ducks in order and write non-contingent. And if you're realistic, you know the market, you study the market, you know what the budget should be, what a house should be selling for, and you're not undercutting each and every offer you're writing, I say 2 months.
2 months. So what's a non-contingent in earnest money? Like what are you putting up for a 1.5 starter home?
So 3% is the deposit.
Okay.
And then your down payment is really based upon your lender. On average, we're seeing 20% down.
No, not down payment. But so like how much money is going hard day one when you are writing that contract? If you're saying, hey, it's not contingent on inspections, on financing, on anything else, and it's a, say, $2 million property, are you putting up 10% for earnest money at the title company?
3%.
Oh, it is 3. Okay. So that's, yeah.
It's a standard 3% deposit.
Okay.
Yes.
Yeah. Because like in the commercial world and apartments and that sort of thing, 2018 to 22 or 21, it was like you're going hard.
Yes, of course. Yeah.
Yeah. Just didn't know if there was something that you were coaching your buyers on in order to be prepared to put 10% down hard day one to get a deal if it was that tight of a market,
Yeah, lucky 3% is fine.
Yeah.
We're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline is currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com.
Okay. I want to talk about two things before we jump off. One, your TV show that you're on. I watched a couple of those episodes. Very cool to see you out there, highlighting the local businesses is very cool. I love the way the show is set up, American Dream, where you are walking the neighborhood, introducing potential buyers and sellers to the area, and then you present your listing. So I really like the way they have that produced. Again, the show is all about how other agents can learn from you and what you're doing to win business and what you're doing to, I guess, convert leads that come through something like this. So just walk me through. How did the show even come about? Is that something you apply for, or is that something that they reach out to you and say, you're just such a stud? Come on, check it. What's the story?
Thanks for the compliment. But they reached out to me, and then they did have a panel kind of interview, I would say, in a way, because there was competing individuals in that room. And then whoever expressed good interest obviously answered the questions in the correct way. It's all about who is going to show up and who's going to show well. So selections were made at that point in time. And then the production is done. What happens is the production is done about a month and a half before it's going to air. So we get to choose the location, we get to choose the listing. And like you said, Randall, we do want to highlight a lot of the local businesses, or, maybe even a luminary of that area. It could be the mayor, it could be a tech innovator. And then what I like to do is I like to match that whole portion of my particular segment with the home. So it's seamless. So if it's a luxury boutique that I'm showcasing on the show, I want to have a luxury home, one of our listings that I'm bringing on. If it's a cafe, I want to make sure that the house that I'm showing has a great kitchen. So I really try to make it a seamless kind of integration.
Yeah, that makes sense.
Which has been fun because it shows a lot about the lifestyle aspect of real estate, which sometimes is underplayed or overplayed.
Yeah.
So this way, it really does integrate both aspects.
I just didn't know how much of a say. So that's interesting that you can pick the location and it's not 100% produced by somebody where they're like, you're going to show up here, these are your lines, this is what you're going to do. So yeah, that's interesting that you have I guess, a hand in the creative development of that.
We do a lot of creativity, which is great. And we really can make it our own personality, our own style,
Yep.
which we're writing the entire script or ad-libbing it, whatever you want to do.
Yeah.
So, it's great. The main thing, of course, is they're bringing in a top-end videographer to get everything done, lighting, obviously making sure wherever your shots is, that it's going to be something that's really going to showcase well, which we both want. So so it's a big partnership.
So, all right, then walk me through it. How, for lack of a better word, I guess, well known were you prior to this type of thing? And has it helped you either drive more leads, drive more traffic? Like, what's been the result of it? Is it just your friends are like, hey, man, let's go see you out there. It's good to see you on TV. Or is it generating leads for you and actual trackable, noticeable ROI?
I would say definitely trackable, noticeable ROI. What it forces me to do as a team leader of our team is to definitely be out there front and center with the community, which is part of our mission statement, to be extremely integrated with the community. So that's when I plan out and say, okay, this community, who do I want to focus? Is it business? Is it the person? Or is it the environment? So it gives that kind of creative leeway to bring an aspect of the community into the segment. And it shows that I know what I'm talking about, that I've chosen something and curated something that is, I've done that. It's not someone who's come in and chosen the location. So it really does force me to showcase that aspect of real estate. And it's not just about the listing or the home. And then it gives an opportunity for me in a listing presentation to say that, okay, your home could be the next home on national television.
Yeah.
So I think that was intriguing to a seller to have that option. So it is a win-win. The visibility is great, of course, on social media, on national TV, having it on my LinkedIn. I've gotten inquiries, which is really nice too. So once again, I could see the benefit and what it's done for a business and a lot of exposure overall. And video is definitely the name of the game, and it's all video, right? So
yeah, it is. Again, I popped on, looked at it, and anybody who's been on the show I've had another post on that's posted on American Dream and watched some of theirs was like, man, this is great. Again, I love the way it's produced, the way it's set up and structured. So let me see. Yeah, the process on that, the leads. So yeah, I was just kind of curious. So if anybody, again, they reached out to you, I'm just thinking if anybody wanted to apply, they could, I guess, go on there and apply, or they are only just reaching out to like top producers in the areas that they're focusing on.
Definitely reach out to me. They could reach out to anyone on the show, want to go with someone local, and then they could, refer them. They could suggest that, okay, why don't you give this individual a chance? And there's that screening process. So once again, it's not a guarantee.
Sure.
You'd have to be screened and then.
Okay. So reach out to Malin if you want to get on TV, guys.
There you go. Yeah.
Casting couches. Yeah.
My pleasure.
Yeah. So, all right. And the other thing I want to talk about before we jump off is about investing. You mentioned that you have a commercial lease, just in general, investing in the San Francisco area. If I'm an investor and I'm trying to buy something, what's the sales pitch for an investor coming in looking for a property? Like, what is it that you would point me to and say, hey, you should look at this type of asset because it's going to 3x? Or is there even a story like that right now in the market?
There's definitely a story, Randall, here in San Francisco. It's opportunity time. It's buyer's time. I keep telling everybody that everyone wants a buyer's market, but everyone cries during a buyer's market because what is a buyer's market? It's a recession. The economy is not doing good. So you have to be pretty bullish to buy in a buyer's market as a buyer or as an investor. And kudos to Warren Buffett. That's when he buys, right?
Yeah.
We constantly preach that to the world, but only the smart people do it. That's why Warren Buffett is Warren Buffett, right?
Yeah.
So multi-unit, this is the time. I mean, there's never going to be a chance like this to buy a trophy property in San Francisco for 30, 40, who knows, 50% below value. San Francisco is not falling off a cliff. Yes, we can have another earthquake, but luckily we're pretty solid. We are a rock. You've heard of the other rock, Alcatraz.
Yeah.
It's a rock. So we're not going to fall off the planet. But being serious, multi-unit, it is the opportunity time.
I met a guy at a conference a while back. His family was in the business. And he was very in tune with the condo conversion. So they were taking either condos and converting to apartments, or the reverse. They were taking apartments and converting and putting a condo regime onto the whole thing and then selling those off. So do you see that coming, or is that just kind of like a very small niche and that's not really the play that you're talking about?
Well, the city is one to reckon with because they have, of course, a lot of rules and regulations and processes. But once you work with cognizant realtor who knows that space, it's a cakewalk. But when you don't, that's when honestly the issue happens. So you're talking about condo conversion. Yes, that's an opportunity because we do have TICs in San Francisco, tenancy in common, and those you can trade and sell as imagine trading and selling a single family. Almost the same thing, except a different category. TAC lending is available in San Francisco, so no brainer, that's an avenue. If you want to do true condo, it takes a little more time, but once again, a possibility. So like you said, Randall, yes, I mean, that's one avenue. Once you buy your multi-unit, keep it as a multi-unit for a couple of years. If you want to trade it and start selling it off, it can become an opportunity to do that. That's why it's a very valuable piece of real estate to have, because there are options.
My biggest thought would be, what are the vacancy rates currently, like across the board? And what's the thought process on those coming back? I know you're saying you got to be bullish on a city in order to buy right now. So with the, I guess, population trends, we don't have to dig too deep in it. I know we're getting short on time, but I'm just curious myself. I'm like, those are two of the things that I heavily focus on. If you want to touch on that just briefly.
Yeah, if you imagine, once again, once you're a savvy investor, a lot of it is you are doing some of the things what a savvy investor would do. You are probably not going to be one of those individuals who's going to hold a property for 20 years. You're probably going to 1031 exchange out of it, or you're going to condo convert it, or you're going to just cash out and sell, right? So the kind of crust of this particular conversation and this particular point is, what are you going to do and how are you going to make your money if you don't have tenants coming to what you're going to do? The thing is that tenants are coming to San Francisco because right now, with AI coming in, with leasing rates adjusted down, it's made the city more affordable, you could say, quote unquote. And not to say that apartments are renting at a bargain, they're renting at healthy rates where you can carry a property. Once we reach those times in San Francisco where rental rates are off the hook, that's when you're kind of getting a lot of cash flow overall. But yes, you can carry your properties right now. There is demand. I mean, there's people are still living in San Francisco.
Sure.
Good thing it's not a place that's overdeveloped. So that kind of keeps the inventory tight. So I don't foresee a large vacancy factor. I think in 2020 and 2021, that was probably maybe some of the lower vacancy on the residential side. But since then, 2022, 2023, going now, it's only been on an uptrend.
I guess the question would be, so on those apartments, do you think that it'd be low cash flow for the next 3 to 5 years, and then you're making your money on the exit because once you have the place stabilized or rented out, then obviously the value of the property's gone up and hopefully rates have come down so that now you can trade at a higher or lower cap rate? So is that the play? Like, you're not buying these things for cash flow, you're buying them for appreciation?
Yeah, and honestly, Randall, that is true. But I think it's just 1 year. You just have to last 1 year because 2024, the tables are already turned. So you just have to ride it out for 1 year. And maybe it just might be even 6 months because San Francisco moves very, very quickly. And like I said, we've been through the worst. So imagine, turn back the clocks again, the beginning of my conversation. What happened here in 2012, social media? What's happening now, AI? So you're going to start riding that wave. So you're only going to go better from here on end. This is the high. You're kind of increasing now month by month. Your appreciation is month by month. So you're going to buy low, sell even a year from now, you're going to do well. I mean, everyone's talking about 2025 being this magic year when from 2025 to 2030, real estate is going to go bonkers. So now's the time to buy. Buy your bargain right now, and you're going to be a king.
A lot of guys that I know that bought up a bunch of properties in 18, 19, 21, 20. The war cry is currently survive to 25. So it's like, once you get to 25, it's great. Sell your property. Yeah, that sort of thing. So yeah, I've heard that. And are you a hard stop right now? You got another?
No, I'm good.
Okay. So I just want to ask you about your deal in your commercial property and kind of figure out what that is and what that looks like, just if you want to touch on that a little bit.
Yes. In terms of
investing wise, is that the only investment that you have, or do you have other?
No. Luxury condo is what I have in San Francisco. And then also I do have 2 short-term rentals, and they're out of state. One is in Tennessee in the Smokies, and one is in Pennsylvania in the Poconos.
Okay. And how did those come about? Like, why Tennessee? Is that somewhere you like to travel?
No, I've never been to both of those properties, but I do follow a lot of trends. And when you were looking back in 2021, 2020, the Poconos and the Smokies were the place to buy a short-term rental. So since then, very transparently, I would say it's changed quite a bit. So I guess the short-term rental trends move very, very quickly versus the multifamily or commercial trends. That would be my kind of caveat on learning. But the reason why I did buy in those areas were truly because when you're looking at the map for short-term rentals, of course, there's places to be, but those were definitely within the top 5.
Yeah. So what's your occupancy on those on an annual basis? Is it still hitting some numbers that's floating the debt, or did you put debt on it, or do you own free and clear? Like, how'd you?
Yes. I mean, thank you for asking. Pennsylvania's doing well. Poconos, for that particular home, that was a single family home, and the acquisition price wasn't as high as the Smokies. The Smokies is a much larger cabin, sleeps up to 20. So if you imagine, once again, trends do change and maybe people don't want to travel as much with a larger family anymore. So I'd be cautious on maybe some of the larger homes and see who your true audience is. Because once again, if you buy something that's maybe more smaller or mid-size, that should always have almost 100% occupancy in theory, because once again, the audience is so much larger.
Yeah.
But when you have something that can sleep 20 and above, you really have to have a committed group and committed people to kind of constantly rent your home. So that would be my kind of words of caution and advice is always buy something that's a little more evergreen and can really meet the scope of the general audience. Once you kind of go a little narrow, when the economy turns, those are the properties that are really going to, unfortunately, take a little bit of a dive.
Sure. So what's your plan with those now? Are you just holding on to them, riding the wave, or what's the...
We're using this hold on the Poconos. The Smoky is conversation this year. We are running the numbers to see from a sales perspective. We want to make sure, of course, we have enough appreciation, which we do, which is great. Mm-hmm. We bought a relatively good price. And then, of course, we want to 1031 exchange out. So we have to make sure that we find something or find the right asset class that we want to exchange into. I want to go more multi-unit. I don't necessarily say I would want to buy another short-term rental.
Yep.
I think the multi-unit environment still has a lot of legs to it. And once again, it's a wide audience, right? In honesty, people do have to live somewhere. So more of those entry-level multi-unit categories, that's where my enthusiasm currently lies.
Yeah.
And that's what I do. The luxury condo in San Francisco, I tried to sell it during the pandemic in 2020, did not sell. I tried to sell it in 2022, it did not sell. So I'm holding it. I have a good tenant in there. I wish the rent was higher, but it's not a low rent. It's an average rent. But it's just, I see the numbers and it's such a dramatic decrease from where we were at the height. It's $1,000 less.
Yeah.
So that's a variance to talk about, right?
Yeah.
Commercial wise, with our commercial endeavors, it's almost a little of a wait and see. We've gotten, inquiries off market and otherwise, but nothing really that excites us in general. What excites us more is creating new usage. There's a trend here in San Francisco of new usage, quite honestly. There's some very high-end restaurants that have come here recently, and they're taking up space. And there's also talk, of course, of rezoning, so having commercial and making it residential. So there is opportunity to relook at it and hold it longer. There's no need to have a fire sale of any nature. And that's what a lot of the offers are about, quite honestly. Once you're getting a lot of these off-market offers, they're really trying to get that individual who is in that arena that would say yes to a fire sale. But honestly and very transparently for San Francisco, I've spoken to a lot of owners in the commercial space, and a lot of them do have good pockets. So you can, of course, have a few of those fire sales, but there's not going to be a lot of them to be had at this point in time because there's much more enthusiasm. There's much more, I think, congruency between us and, say, city planning to do something creative and different with your property.
Yeah. Well, on the short-term rental that you have, the 20 sleeps 20, I don't know what state it's in or if what I'm about to say would apply, but there's a company called Picasso. You ever heard of them?
Yes.
Yeah. So there's some PE firms that are going out and buying up single family properties. And their model's a little bit different. They sell it to a group of 8 people. They own it. Like it's almost like a modern timeshare model.
Exactly, yes.
And so, yeah, you may reach out to them and see if they would be buying if you're in the market. And I'm sure there are a number of those that exist as well because they were buying up luxury. It was like the best properties. You get to own 1/8 of this awesome property in this market. So again, it's just an idea. Anybody out there listening, if you're trying to sell something that's similar to that, you might reach out to some of these guys that have that type of capability because they're like the old school Open Door. What's happening with Open Door? They still kicking out there? Open Door closed or what happened?
I think they closed.
Okay. Yeah, it's been a minute. A buddy of mine, it works there here in San Antonio, or he used to work there, and he like ran up their whole San Antonio division. And I just played pickleball with him 2 days ago and didn't even ask. I haven't seen him in ages, but yeah, another story for another day. Well, hey, Malin, I really appreciate you jumping on, sharing your information, your knowledge, and I love learning about other cities and like what's going on in those markets. So, wealth of knowledge there. If you guys have any questions, reach out to Malin. Looking for a property out there, definitely. I'm going to put a link to your show because I want people to look at you and then, yeah, if you guys have any questions, I'm going to put all your contact info in the show notes as well. So, again, thanks for jumping on and sharing your information.
Yes, and you do need to come to San Francisco. You're missing out.
Hey, I have never been, honestly. My wife, I think she lived in Santa Monica for a while. I'm sure she's been up to San Francisco, but now that we've got 2 kids, it's like a trip that we should take for sure. So
there's so much kids activities in the city. It's not like New York City. It's much more kid friendly, I would say.
Yeah. She lived in New York for a while as well. And when we go up, her sister lives up she was in Brooklyn, now in Jersey. But when we go up to visit, she's like, I can't imagine raising kids here, right?
Yes, yeah.
In the city. So yeah, a little bit more space here in Texas to spread out and do our thing.
Of course.
But yeah, I mean, San Francisco sounds like an awesome place and we definitely need to get out and take a visit.
Yes.
So
we hope to see you here soon.
Yeah. Well, I mean, I'll reach out to you. Yeah. You show me the sites.
Yes.
All right, Malin. Have a good one. Take care. Good catching up.
Thank you. See you later.
All right, bye now.
Surprisingly, most of the agents we speak with got into real estate hoping to gain passive income and become work optional. However, only 1 in 5 ever start investing. Most are simply too afraid to start. Once you get educated by listening to this show, you'll be able to overcome that fear and become the 1 in 5 who are finding financial freedom. Don't miss a single episode. If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. And we'll catch you on the next episode.